Okay, guys, we got a lot to talk about. All right, we're going to talk about this with HIMS, what happened to HIMS, what's going on, is this justified? We're going to talk about bonds. What obviously we have to talk about the Bet4 auction. What does that mean? Why did it cause equities to sell off? Where are we going from here? What's next? Why is gold also rallying with the market when typically these have had an inverse relationship? What's going on with that? Where are rates likely to go next? There's so many things that we gotta talk about, right? So first, let's talk about what actually caused the rally today. Google led the way because of their new AI features, and what previously led to the sell-off on Google on like a longer time frame was fears that search was going to lose market share to AI. Now, obviously, if I just this sell-off here is got to be dumb retail, who's literally years behind the premise that search would be disrupted by AI. Literally years. Like everyone who was worried about that de-risked back in 2023. And that's why you're seeing these get bought up, probably by big money. Just reactionary. Just, oh, okay, dummies are selling this again. Let's buy it up. Because literally today we got the great obvious news that, well, great for Google shareholders, I guess, that they've launched new AI features here. And we can see it, the new Meet AI mode. So now you can activate the AI into your Google search. They've already incorporated it. I'm literally looking for them to incorporate this in YouTube, to kind of like summarize videos and make them quicker to find, and to more precisely direct you to specific YouTube videos, because they have all the transcripts now saved. So I think that would be a really cool feature that I want to see. But this is great. This is Google utilizing their AI, and merging it with search. It's going to still lose some market share, but honestly, most of the selling and risk that people were worried about is Google being broken up, being a monopoly. And again, that's another buying opportunity. So, because the parts of Google are worth more than the whole. And like one of my shorts is Apple, and for some reason, people have been way more prone to buy Apple and way less fear than something like Google. But I think this is a great litmus test for critical thinking skills, and I mean, just how savvy are you as an investor? Because when you compare these companies, Apple grows at 2% year over year, has no new innovation. Google's leading in self-driving, they're leading in quantum computing, they're leading in AI, they own YouTube, bigger than Netflix, they're worth way more broken up than together. And yet, when you compare the evaluations that these companies trade at, Apple trades at substantially higher premium than Google. So this is like, it's like the are you smarter than a fifth grader? If you own Apple right now and you don't own Google, I don't think you're smarter than a fifth grader. That's me trying to be as nice as possible, trying to censor myself as much as possible, trying not to be flagrant. But holy crap, that's unbelievably stupid. Massive mispricing from the market, in my opinion. I think it's so egregious. Apple's the easiest short to put on, and I think the announcement that we got today that kind of led to this plunge on Apple, is right when the bot auction was bad. Apple snuck out the news that they were delaying their AI updates, which tells me immediately that it sucks. And they saw the Google updates and they said, oh, snap, we are so far behind. So they got to play catch up because they're using someone else's tech. They're never going to be in the lead because they're using tech from OpenAI. So, they're going to forever play catch up and they're going to forever fall behind because they decide not to play a role in this, because Tim Cook's not an innovator. He just isn't. He's a copycat. And this tech moves so fast, you can no longer be a copycat. You're going to have to make something innovative when it comes to like hardware, which you did with your goggles, and it failed miserably. So And now there's rumors that they're going to get into like home security. Blah, no one cares, right? Okay, so let's talk about HIMS before we talk about bonds. HIMS had a pretty dramatic sell-off in the after hours today. Now, this was related to Sigma offering a new out-of-pocket costs for patients. Now, this includes Wegovy and Zepbound, both also sold by HIMS. HIMS sells Wegovy through a partnership with Novo, and Zepbound is I'm pretty sure it's the Eli Lilly product. It's not through a partnership, but it is also sold by HIMS. Now, this is $200 a month is what Cigna patients will pay. Just $200 a month. Wegovy, I believe, is about $299, and Zepbound's like $599 through Hims and Hers, and I think you can get cheaper through a year-long package. And I might be mixing up those numbers. The point is that you're losing pricing power from Hims and Hers, okay? And a lot of the hype that drove up the stock was because they were making so much money from the semaglutides. Now, if you're in the Discord, you know that our bull case for this company, it does not solely rely on semaglutides. And that is, this company has great growth even without those. It's on a great trajectory. And then there's another issue with this exaggerated sell-off, you know, coming like right down to this 52 support. The other issue is that Cigna's not small, right? You've got 100 million people that are in Sigma plans, but this is actually an add-on plan that a employer, because these are employee benefit packages, an employer needs to add this on to their employees' packages. So it's an extra benefit that they're going to pay a lot more to add on. Okay, and the trend right now for employers is not to add more benefits at all. So out of that 100 million, realistically, the amount of people that are going to actually benefit from this is maybe like 1 to 3%. And that's literally it. It's going to be almost no one. And it's going to take time, probably a push. Maybe some employers will kind of do the cost benefit analysis and say, our employees are going to, become better workers if we offer this to them. They're going to lose some weight. I don't know. That's going to have to be something that they'll probably do deep research on the benefits of it. And maybe it's a trend that catches on and maybe we see this, but it could be substantial. But I think the initial reaction here is way overdone. It sold off like this was the main catalyst for Hims and Hers. I think it was just a little exaggerated because already the bearish sentiment here, you were already burning out some hands. There's a lot of retail in this name. It's pretty crowded, which is kind of unfortunate because when something bearish does hit, it tends to exaggerate the sell-offs. So something like this, it's such a bummer because we were literally firing on the 4-hour. We had reclimbed over the EMAs, and we were getting a really solid push on the day before. We kind of got tagged by all that news. So was pretty quick to react in the Discord. I made a big announcement to people to start toning down their bullish positions, but still got hit by that. So we had that today. I called out when we got the bond selling. So let's talk about the bond auction being bad and what that means for the market as well. So a lack of interest in U.S. debt means that there's really honestly a few things at play. One, we've kind of done a significant amount of damage to relationships globally, which is definitely going to make other countries less interested in U.S. assets in general. And that's like a currency diversification, right? If you're trying to get away from the U.S., you don't want to buy anything denominated in dollars. It doesn't matter if it's like an equity or a debt product, right? So that's been a big driver already. We've already seen that. Like that's the whole reason that DXY has been persistently weak. Like if you read our newsletter, we've already been talking about this, which I guess is a good point to add for everyone on YouTube, because I don't think I've ever talked about it on YouTube. But in the link down below, there's my newsletter, and we talked about some of this on there. We did a whole macro walkthrough, right? We talked about the big beautiful bill, and then a lot of these are things that we've been talking about in the newsletter for a while. This is my point. So you're getting, it's not just that though, right? Because we also saw lots of turmoil from Japan, where they're also getting an unraveling, right? This is also coming down to the pivot from Trump. Okay, we had a president who said he was going to bring down the deficit, who was creating, or I should say, activating the potential of Doge to cut back fraud, waste, and abuse, which sorry guys, I was hopeful but was a failure, undoubtedly. And now he's kind of pivoted to his big beautiful tax bill, which is going to be massive spending, which could be beneficial for markets. So far, there's been a ton of pushback on that, though. So we'll see if that continues to pan out. But that type of inflationary pressure, massive government spending, tax cuts and stuff, that's going to send equities higher, could bring back inflation, which already is under pressure because of the broad tariffs. We're not even going to get back into the tariff conversation. I'm just going to throw that out there. There's no reason to get in the weeds into it. This is going to put pressure on yields, and putting pressure on yields is very significant because we're breaking out of, what would this be? It's like a 40-year downtrend, right? It's like if this was a stock and you saw it get a move like this out of the hole, and then kind of, actually, if I even remove these drawings, this would almost even look like a wedge formation right here. That's about to break to the upside, right? So that's it's really ugly. That's kind of telling us that we're probably going to have more of the chaos, right? So what does this mean for equities? Where do we go from here? In my opinion, we're going down. And this is something that I've been talking about for weeks in the newsletter, which is free, by the way, and you should go to subscribe. Links down in the bio, because there's like 40,000. I have like 40,000 followers now across the socials, and that newsletter only has 14 subscribers. So please, for the love of everything, I spend way too much work on that thing for so few people to read it. There's great trade ideas every week, analysis, breakdowns of earnings, and just all kinds of stuff. Okay, so. Yeah, it's like way too much value for something that's completely free. Anyways, we're probably going to head lower. And what you really need to watch is to see if we get a continuation tomorrow. So far, futures is holding up really well. Actually doing a bit... Oh, it's not gold I'm looking at. So far, futures, is holding up decently well. It's pretty flat at the moment. This is going to create a very interesting morning to see if the selling continues. In my opinion, this trend, nothing stops this train at these yields spiking to the upside. So I think you really need to start taking some risk off, especially with the market running so hot. Especially when I look at the daily, like the daily is already rolling over. And we've already been in a bearish trajectory, from the monthly. A lot of people were fooled by this bounce to the upside. Just keep in mind that on a longer time frame, we're still at higher lows, right? And, even us at MBT, like I've been chasing this stuff like a madman. I got tagged today because I was so long. Bitcoin right now is holding up so far because actually the turmoil with the bonds is beneficial for Bitcoin, because it's the bullish thesis. Let me make this actually perfectly clear, because lots of people seem confused. The bull case for Bitcoin is the absolute collapse of the traditional financial system, and we're not talking like, dollar weak and debasement of currency and people don't trust government. No, we're talking about all major banks collapsing. The absolute failure of traditional finance. Markets collapsing. Global recession, maybe depression. Okay? The failure of the US dollar system that empowers the entire global financial system collapsing. Like, that's what Bitcoin maxis want. And I think there's a lot of people who are bullish on Bitcoin that don't understand that is your ultimate bull case. Otherwise, there's really no real reason to walk away from the dollar. There's a lot of people who seem to think, oh, it'll be a slow, gradual transition. There's no historical precedent for that. That literally has never happened ever. Anything that causes people to make a dramatic change in behavior, and that change in behavior being using a different storage of value, because I don't think this will ever be used as a currency. That's what stable coins are for, right? You don't want a currency that changes in price. But this is basic. It's very basic economics. I saw a post from a guy with 400,000 followers today on X talking about how the Bitcoin was intended to be a currency. Okay, go back to high school. Stupid. All right, stable coins going to be used for transactions, right? Bitcoin is going to be a store of value. I don't care what it was intended for. I know basic economics. That is the bull case here, though, okay, is that catastrophic event, okay? It's not going to be a gradual change at all, okay? And that probably happens with the dollar milkshake theory. Go watch previous videos on that one as well. We're trying not to get stuck in weeds, but a lot of these concepts are very big, and I'm trying to make them very small, okay? Understand, but I know I'm not explaining everything to the totality necessary to fully understand, but I don't need you to fully understand. I just need you to get the vibe, okay? So that's the vibe here, okay? Bitcoin probably, even though it's decoupling, will not continue this trend if the market gets substantially weak. I think the most bullish scenario is you kind of stabilize here. The market still is in a fork in the road, okay? So if we do see a recovery, if that, the big, beautiful bill, as Trump puts it, actually gets passed, we could see a rebound. That rebound could lead to VIX suppression. Everyone starts selling the VIX contracts. It causes this to come back down below 19. And then we can get like a melt up through the summer. If we don't see that, we see the market gap down tomorrow. We see a continuation. Okay, we're going to start knocking out these targets to the downside one by one. We're going to break 57. We're going to go down to 56. If that breaks, we're probably going to go down to 53. And then before you know it, by August and September, you've already begun such an unwinding out of U.S. assets and into, the DAX in Germany, Korea, European, China even. China has lots of opportunity probably because of their AI innovations and because China's walking away from this. China, let's be honest, guys. Okay, people don't want to hear this. I get it. It's sad. It's very sad, but my job isn't here to make you feel better. My job is to help you make money, and what's going to make you money is hearing the reality of things, right? Okay? And don't be a bear, bull. Don't be a bull. Be a realist, okay? China is walking away from this tariff war in such a better position. They have increased trade globally, both with Asian countries that they did not get along with at all. They've got lots more trade with Europe. They got everything they wanted from Trump, who completely capitulated and walked away, called it a win. Oh, the tariffs are coming off. The market's gone up. Look, I did the right thing. Then the market's just relieved that it's getting some pressures being taken off, that it won't, that you won't destroy the bond market. It's just a relief rally. It's not a good thing. So China's walking away with all these great deals. They have tons of good innovation. They're starting to make their own chips. They are starting to make all the moves to do a major restructuring. What Trump wanted to do is what China's actually doing. Starting to buy actually more from the U.S., but it's part of their restructuring to fix the broken fake economy that they ran on before. it's going to be a slow process, but I think dips on China might actually find their way in a small portion of my portfolio, because there's probably going to be a lot of opportunity there. There's probably going to be some rallies if the Cold War continues. If we get into a big tech battle, China might not win that, but China could still have tons of innovation, and that puts them ahead of Europe. That puts them ahead of other parts of the world. So it's not a dumb thing to have in a portfolio. Definitely not. That's a different take from that I've had. Right. I've said previous times, like we traded China last year in 2024. We rode all the rallies from, I don't really want to pull up FXI, but we could pull up like Baba here. Like we played Baba on these big rallies to the upside, right? This was a big move. I guess this was this year, wasn't it? Yeah, it was. We played this coming out of 2024. This big gap up. We played this rally. That was last year. Okay, then we played the dip coming into the beginning of this year. That was really great rally as well. And I think the reason you're not seeing us kind of revisit the lows and start to create, on a longer time frame, these higher lows. You do have a wedge here, but I think you're going to actually break this wedge to the upside. So that's something I'm going to be watching here. This was an old trade idea for China. Anyways, guys, I think that's about everything I wanted to cover. I'm sorry, it's super late because it's my birthday and I had plans all night, but I needed to put out a video and talk about some of these things because they're very important. You're going to set the tone for the rest of the summer, kind of the summary of what you should walk away with. If we get to continue selling, we start taking out key levels. Kind of watch to see if TLT gets a continuation to the downside, it'll trigger equities. And that'll kind of prevent you from getting faked out. So if like the market tries to bounce tomorrow, but bonds don't, take a bit of caution. If TLT does kind of just gradually melt down, like throughout the day, it does kind of what it's been doing, where it kind of does a gradual meltdown, kind of stagnates, and then kind of does a small gap down again, and kind of bounces. That's fine, right? What you don't want to see is this type of velocity and momentum to the downside. Because I thought breaking 85 would be a pretty big deal, but it seems to be the case that breaking that isn't as big as the velocity of the move. Similar to the dollar, like the dollar can continue to be weak so long as this doesn't have these big spikes to the downside like that. The velocity of the move becomes concerning. But if we just kind of drift lower here and kind of break out these key levels, that's totally a-okay. Actually, a weak dollar is kind of supportive of equities, as long as it doesn't get out of control. Gold also had an up move today. It's related to less margin requirements for futures contracts. I think they dropped like 16%, or maybe it was 9% or something. Significant. That was a big. It's going to gap up tomorrow, most likely. I'm pretty sure the futures are parabolic right now. It's actually a great overnight trade, but I was away. Yeah, real big move. Back over here, 33.30. So yeah, I think that's about it, guys. God bless. If it's uncertain and you want to wait for the clarification, don't be scared to let this drop all the way to like 575 before you get short, just for the ample confirmation. If you're uncertain, or if you want to wait until you kind of get the bounce and then the denial off like the major EMAs here on like the 65 minute, if you want to see this come like test 88 again, or 86 and then continue to the downside, that's fine. Don't feel like there's any panic or FOMO. This is something that I've been talking to traders about a lot. There's a million opportunities in this market. And this is I've been talking about us getting short for a while, pretty much all the way up. I've been saying keep in mind, like we're I mean, how long have I been going over this same exact chart, right? Where this box equals re-entry for shorts. We've been literally had this up here since what, like, it was like beginning of April. Even it was like down here we were anticipating the market to come here, and then we get short in this box, right? And we got to the upper end of it, right? This was actually my target, was the 57.75, and so we overshot it by quite a bit. Oh, if we get a continuation and we kind of eat up this rally, look for us to maybe even double top before we get the true solid. But I think it's pretty clear that regardless of how this pans out, you're going to get a movement back to the downside. I don't think anything stops the movement from equities. And I think that causes a chain reaction to selling to the downside. Additionally, I think the GDP print in July is going to be also rough. So shorting's easy. Shorting's fun. Love shorting Apple. Still overvalued as all get out. But there's also a lot of like high flying growth names that are that, like, who was it that didn't even get a pullback today? Oh yeah, CoreWeave. Very overvalued right now, and I know it's an amazing company, but it's an interesting name to look for a pullback. A little dangerous to short something that's so fundamentally strong. A little bit easier would be like Qubit. Like, that's an interesting short I'm keeping an eye on. Looks like we've kind of lost some momentum on the daily. There's like a beautiful gap down here, and there's decent liquidity. So looking for maybe a continuation there. I think even if market starts to climb up, this one can melt. So yeah, there's different stuff. HIMS long term, still love it. Google, if they split this company up, I'm gonna buy YouTube with both hands, like a madman. The valuation of that, wherever it's at post split, we'll talk about that later when we get to it. There's a whole science behind it, but follow me if you want to keep updated. You're enjoying the video, click the link down below to join the Discord. God bless, guys. Have a good night.